Hey everyone, just doing a quick sound check. Thanks, Brad. We'll get started here in just a couple minutes. I have 3 stocks pre-picked. Give me a couple stocks that you want me to cover tonight. I'm going to do a total of 6. Welcome everyone to the Kendall Report. It is 9 p.m. Eastern, and we're going to do a number of things. I'm going to lay out the show just a little bit. I was going to pre-record the videos for the individual stocks, but I decided to do them live. I've actually not looked at them. I do have a list. I'm going to do Tesla, Apple, and I have my own personal pick that I want to talk about that I've been watching for a while, which is ConocoPhillips on the oil side. And I see you folks have given me plenty to think about, so I'm going to do 3 other stocks, and that will be in the middle of the show. So we'll go through the indexes, we'll do stocks, and then we're doing 10-year crude oil, gold, and we'll continue with Bitcoin since it's on a huge run. So let's go ahead and just kind of dig into what happened yesterday. And we finished on the S&P 2 ticks, 0.2 off of an all-time closing high. We're still a little ways off of intraday high, but we're definitely seeing that move, and it looks like we're seeing some weakness overnight. But I talked about this last night. I thought we would stall for a couple days, come back. We did extend for one more session, so it looks like to me, and I'll go through all the details here in a minute, that we're going to get some little bit of a pullback here as far as the indexes go from that standpoint. But yesterday we had the Beige Book come out. I talked to you about that last night a bit, and Beige Book was focused on the typical stuff, supply, labor shortages, all the things that we know. And I wasn't really able to pick out any. They focused so much on those mainstream elements. It was interesting. Now, I saw a brief interview tonight with Metzel, the Fed president, and I thought it was really interesting because one of the things that she talked about, the journalist had asked her about transitory inflation, and she kind of smiled. She goes, "Why don't you really like to use the word transitory?" I think of it as more of we need to look at the factors that are causing it. So the Fed's backing off, even though Powell has beat us down with this transitory stuff, and we knew anybody who was paying attention knew this stuff wasn't transitory. It wasn't actually temporary. And in fact, my bet is that a lot of this stuff is permanent, and we're going to continue to see energy, the supply chain being disrupted, and things are broken. They're not disrupted, they're broken. Let's get real on this thing. And you've got still the concepts of the infrastructure deal coming out, and that's just more universal income and those type of things. So a lot of folks are going to have a hard time trying to figure out whether they want to go to work or not. There's still massive shortages of port workers, even though the port workers were working till 3 in the morning. So when President Brandon said that we were going to open them up 24 hours, well, there actually was nobody to work there, and they've been having trouble filling that. There's another issue. Somebody pointed out that some of the older trucks aren't allowed to go into port. So there's a shortage of trucks, there's a shortage of drivers, there's a shortage of everybody and anybody to get the supply chain working again. And that's a lot. We always knew we were operating in the, what I call it, just-the-time inventory system. Well, they disrupted that. They broke it, actually. And now it's trying to get those gears to all turn on a regular basis is pretty hard. And as you look at the scenarios that are going on out in the harbor, looking at Long Beach and LA ports, they're trying to divert things around. I saw Florida's trying to take some. Well, they can. New York is trying to take some. But that's a long haul around the country, going through Panama Canal and getting around and all that stuff. So this isn't going to change. But even when they get to the ports, who's going to drive the trucks again, right? So this supply chain, this inflationary scenario is going to stick around. And of course, we see, and I'm going to go through a fair amount of detail. I'm starting to cover, tonight I'm going to go through a number of things in the energy sector. And, that just continues to move higher. And there doesn't seem to be anything to stop that. But I did think it was interesting when the Fed President Metzel was talking about, transitory. She was also talking about, well, we're not going to be raising rates. And I'm going to tell you that ultimately, I went through one of these rants a few weeks ago, and maybe it was last week, but the Fed is ultimately not going to be the one that decides where rates go. And I'll just go through a little bit of this. I'll cover a little more when we go through the 10-year. But yesterday was a 20-year auction that went off, and it went off like crap. It was not a good auction. It's kind of a bastard maturity anyway, but it didn't really disrupt anything. But I keep telling you folks, we're one bad bond auction away from disaster. And I'm not worried about debt ceilings or the amount of debt. I'm worried about if anybody wants the debt. And at some stage, my expectation is maybe it's 10 years from now, maybe it's 10 months from now or sooner, that what we'll see is not nobody show up at an auction, but not enough people show up. And one of the things you look at when you're seeing these auctions is the coverage and the tail. And the tail is how much they have to bid them up a little bit, the tail off the prices to get the buyers to show up. And typically it's a 1 point tail. If you get down to 3, that's like a terrible auction. So we've got to watch those things as well. And that's my biggest concern as I keep just piling debt on top of debt on top of debt. This is going to continue to be an issue, I think, from that standpoint. And ultimately, the inflationary forces and other things that we're going to have to deal with are going to end up driving these rates higher. And I'll go through the details, so I'll leave it at that for right now. The other thing, like I said, the beige book wasn't that revealing. I didn't really was able to get much out of that, and I don't think anyone was paying attention. There's a continued bid on that stuff as we go forward. And I think last night I talked about the Evergrande thing. We're not going to know anything. Sunday night, that may be a story. We'll see what comes out over the weekend. I suspect, I know folks think, yeah, the whole real estate sector in China is rolling over. China's rolling over. How's that going to affect our markets and demand and all that? I'm not sure that there's a correlation just yet. Maybe there is. Nothing that I'm seeing, at least at the moment. Maybe it'll show up. But we're continuing to see some things happen, which I'm going to go through here in a minute. The database, it continues to evolve ever so slightly, but there's still solid traction, and the underlying bids that are coming into the markets are continuing to drive this thing forward. So let's set up a little bit as we get ready to cover the database. And the database itself, my expectation is that we're going to see this thing continue to grow on a short-term basis. But when we get to the intermediates, that's going to be interesting. I'll talk about that tomorrow night. Won't cover it tonight, but I think there's going to be some things to watch out for when our intermediate models run on Friday. And I'm actually expecting a little bit of positive, especially if we are able to stay up near these highs. I think right now the metric will probably just, unpack this a little bit more here in a minute, as just staying above 4,500 on the S&P is going to be enough to keep things at least buoyant enough and enough symbols getting traction underneath to maybe get some more intermediate buying from that standpoint. So here's what we got coming as we come into today. What we're going to see here is we've got initial claims coming out. Last few weeks, these things have been better than I thought we might start to fade. I'm still looking for that fade in the economy, hit that wall I've been talking about, but I really don't think it's till we get to, into early November and beyond. That's where things are going to get more difficult, and we'll see how all that plays out. Tomorrow we got the claims. 290 is expected, 290,000 new. 2.59 was a continuing claims. My number I'm looking for, if it gets under 2.5, I'm going to be impressed by that, and maybe that will suggest that we're going to see further marking down on as far as the number of people on the continuing list. The other thing that comes out tomorrow, we're looking at existing home sales, and that might miss. We'll see. We saw the permits and the housing starts miss fairly decent, especially the permits. They were down like 7%. So we'll see if this pours over into the existing home sales. And generally speaking, I don't really have an opinion what's going to happen here. I still think there's a fair amount of demand in the housing market. So we'll just have to watch this number and see what comes out. So let's dig into the database. And I'll zoom in on this in a minute here, but we did see some interesting slight rotation as we go to take a look at this. We're up to 49.24 bullish, so we had 487 buys, 172 sells. So not a lot of traction in the last two sessions, maybe three. What we've been seeing here is just basically a slight on the buy side, a slight bias to the buy side, pushing this percent up. We were around 45 and went 48. Now here we are at 49. As far as any significant metrics, there really is nothing until we get around 62%. And if we can stay a couple more days into this above 48 and keep that number moving forward, then we could see some traction to start to push it to the next level. And the next level really is exactly what I'm talking to you about here, is getting to 62%. If that happens, then we're going to see all-time new highs. All of a sudden, instead of, we're going to be talking about 46 handle. I remember, I don't know how many months ago, talking about some of the targets up around 46.05. I'll update those over, probably do that Sunday night or maybe tomorrow night if it comes up. But for right now, I'm just going to keep the short-term analysis day to day, and we'll cover that bigger picture on Sunday night. I'll have more time to do that. So let's go ahead and dig into the indices and just get a feel for what's going on there. And I think that this will bring in, and the plan, as I said, we're going to go through the indexes I go through every night. Then we're going to do some individual stocks, just 6 of them to be exact. I'm going to go through those pretty fast. I'm doing weekly analysis only, so I won't go into the short-term picture. And then from there, we'll do 10-year crude oil, a couple other energies that I just want to take a glance at, and then we'll get into gold and ultimately Bitcoin. So let's go ahead and get into that now. So what we're looking at on the indices is it's climbing up. We're starting to see PPM starting to roll over just a little bit. They're 0.29 bullish. I would think after this little breakout that we had the other day, we actually satisfied the upward projections here. Let me bring that on screen so you can see this. Those numbers, high target 45.06, 45.48. We look at what we printed up to. We got up to 32 so far. So we printed just above that first number, and now we're starting to stall a little bit. The number we're going to be watching, the level we'll be watching, is a moving target, but we're going to be looking at the 10-day moving average. So what we could see over the next several days, at least 2 or 3, we'll back up into that 10-period moving average. And one of the things I told you that was going to happen has occurred tonight. We saw the 10-period moving average cross over the 40. And when that happens, it typically will signal at least a short-term hesitation in the markets. So I've been anticipating this for the last couple of days, and it looks to me, just based on what's coming out tomorrow and we're coming into the end of the week, that we're likely to see some backing up. Earnings came out. When I cover Tesla, we'll talk a little bit about that. But the bottom line is, it looks like we should come back into this 10-period moving average. Now it's popping at about about 15 handles, 14 handles per day. So in 2 sessions coming into Friday morning, should be around 44.50, 44.65 in that range. And then as we come into next week, all of a sudden we're looking at 44.70, maybe 44.90, and this 45 handle ends up to be where we support as we look at this support that's climbing underneath there. The other thing we'll be watching for is what's going on with the ppm. So let's take a look at the market grid for tomorrow and for tonight and tomorrow. And the market grid is suggesting right now we've got a low of 45.18, right smack on a hit of S1, R1 45.37, so we're a little bit below that. I think we see R1 possibility of an S2 tomorrow. So I'm going to go with an R1 S2 for the ranges, and that should come into play pretty good. Yesterday, I just want to review that. The high was 45.32. R2, I remember talking about, we're looking at the possibilities of S1, R2 for Thursday. That would be the extreme. 33 was R2. We got to 32.25, so just short. And we didn't get about 4 handles short of hitting S1. So basically printed that S1, R2, give a few points here. So it looks to me that we should start to flatten off and see this thing start to move a little bit in a sideways range. Let's go to the SPX. Something I started to discuss in last night's video is that SPX is starting to see a contracting market grid. And when that happens, we tend to get into a space where we roll over, and we look at the Fibonacci targets here. If you can see this on the screen, 45.38 was the target 2, and we printed yesterday 45.40.87. So this is pretty close. And with this narrowing range tomorrow, we look at the market grid for tomorrow. We're looking at probably the possibility of S2 here would be 45.22, 45.42. That would be a slightly higher print. That should be our range, R1, S2. And like always, when you're looking at these numbers, folks, just so that you have a good understanding on how to use this market grid, is you want to look at these R numbers or S numbers as pivot points. So you pivot to the next number. If we take out R1 at 42, then 49 is the next number. They're fairly tight here because what's happening is in the last 3 sessions and actually the last 5 sessions, we're seeing a contracting of the daily range. So we were expanded, and then we've just been contracting from the standpoint of what the average range is each day. And this market grid is actually calculating average range and then looking at some Fibonacci relationships going forward. And it's using a 3-5 day look back. And what happens here is it just starts to tell you when this volatility is contracting that there's probably a slight shift in the markets. Sometimes they'll continue to climb up this little narrow range. I've seen that happen. Right now, the slope on the market grid is still up. But like I said, just look for R1, S2 for today on the cash. Continuing with the indices, and we're seeing a little more weakness in the NASDAQ right now. We're down 45 handles, 0.30 on the session, and it's starting to show that roll a little more. We're also seeing the PPMs about a similar configuration and how they look, but we're definitely seeing this thing starting to back up a little bit. The 40-day is a key number in this pattern, 15,182, and then the next level is 15,049, which would be that 10, and it is rising in this pattern. So there's going to be some support in that target, or that support line is going to move up a little bit. And as long as we stay above about 0.2523 on PPM1, we should see that support or that value of that moving average hold. And the whole point of all these PPMs and all of these things that I use, is putting a probability on a price point relative to some of these moving averages within the patterns that are unfolding. And so what we're seeing here is that underlying support is moving up. It's got enough upward pressure. That's, these PPM stand for price, pressure, momentum. And when we see that, what it really is telling us is that there's a probability attached to that value of that moving average in it holding or breaking. Now, just the fact that there's a probability, let's say the probability right now is about 40% that it will hold. Well, that means 6 times out of 10 it'll hold, but 4 times it can penetrate. Doesn't mean it's not penetratable. It means that it is vulnerable, but the odds are on the positive side, or the being able to maintain that value. Sometimes they'll spike a little bit above or below, and that's why the market grid comes into play to look at that as well. So looking at the market grid from this standpoint, for today, we're looking at, so far we've had a low of 13,326. We're just below S1, looking at S2, 15,286. That's probably going to be your number. Maybe it'll print back up and print an R1 on a rebound, maybe in the general session tomorrow, but that should be the case. And these numbers are also fairly tight here, so you could see even an S3 if this thing starts to get a little more traction on the downside. But right now, I'm going to pick the 286 level as a low on S2 and R1 on the upside. So let's go to the Russell Cash next. Russell Cash finished at 2289.77. I continue to talk to you about this target of the 2326. That's the minimum target. Next levels are 2379, but it looks to me we're going to continue along this slope, and we're seeing the PPM start to accelerate, because if think about what I was talking about earlier, the Russell was up 0.9, NASDAQ down -1. So what we're seeing here is that spread starting to kick in, and I've been telling you for weeks on end, we need that ratio to start to build this thing at the next level and start to get a continuation of a trend. We need the small cap stocks to kind of bring in some leadership here. So you see PPM 1.33, 0.22, PPM 2, and then we look at those objectives. So it looks like there's a pretty high probability, but overall we still have to get above that 2300 level and maintain that to kind of break out of this pattern that we've been in for a couple months. And you could actually go all the way back to June. And as you folks know, for the most part, we've been in a sideways range on the Russell shortly around March, I believe, is when that started. But this is a good look here from the PPM's viewpoint. If we go over here to the Russell spread, that's what I've been talking about for several days, as we're just looking at this spread to maintain. It did uptick a little bit. It's got a lot of work to do to actually where we could say it's leading the way. But it looks to me that this spread wants to start to move back up, which is telling us that we are going to see more positives on the Russell, and at least from a ratio standpoint, meaning that whatever happens, even if it's a down day, the Russell won't be down as much and the NASDAQ will be down more. So we'll see that kind of leadership. It doesn't always mean that the market's going to go up, but we want to see that relative leadership in this particular point in time. Okay, folks, so I'm going to get into some of these individual stocks here, and I'm going to try to go back. I need to open something up so I can see your comments. Just bear with me just 1 second. And I'll get this set up. It'll be easier for me to scroll through your comments here. And what I'm going to start with tonight is actually going to be, I'm going to start with Tesla. Tesla had earnings out. They actually, I think, beat on all levels. But last time I looked, let's take a look here. Let's bring this up on a chart, and I'll go full screen here in a minute. Yeah, Tesla's down 1.44% right now. And let me get to the weekly, because there is some interesting patterns setting up on Tesla. So let's see here. Bear with me 1 second. So we'll get into this. Let me go full screen, and I'm going to go quickly through Tesla, Apple, and then I'm going through ConocoPhillips, and then I'll look at some of the things that you folks are wanting me to take a look at. And we'll go through as much as I can do. What time is it? It's 25 minutes into the show, so I've still got some other of our normal markets to cover, but let's go ahead and get into these symbols. So looking at Tesla here, it's very interesting. There's been, if you go back, way back in 618, you'll notice these dots above the page here. I was getting upward objectives then, and high target 788, 880, 937. And the old high, I believe, was this RTX sell signal at 884. So we're continuing to work right to that level, which is going to be interesting if we can get above this, and with a little bit of weakness overnight. And what I'm talking about with the index is we might see a little backfilling here. And just looking at this on a weekly basis, we look at the grid on a weekly basis, we're looking at 875, 885 is R3 RXT. So we're pretty much maxed out on the week from the expectation, and we're also trading right into this 880 level, which is the minimum target. So it's almost like you would have to expect to see Tesla maybe pause here for a little bit, but ultimately it is probably going to make a new high. And there's a couple other things on this page I'll talk about. This is the longer term, and I believe this pattern is still valid, is the potential for, these are crazy numbers, 1,060, 1,260. We'll just leave those two numbers, and the extreme 1,382. So this is the upward projection. Something like this would take literally months to get to, but we need to get above some of these numbers. But the trends that are in place here, ppm 1, 2, and 3, 1.98, 1.64, 0.14, and anything above 0.25 is a trend. So we have a very strong trend in this index. And I went through this, I believe, last night or night before. We're in that trend maintenance mode on this stock. That upward slope is good. We have that rising 10 pattern that I talk about all the time. It's a simple 10-period weekly average. That's at 766. It's going up 15 handles a week. So that's going to be what I always refer to in this type of pattern as a demand line. So if you saw anything trading close to the simple 10-period moving average weekly, buy everything you can find at that level. Okay, that will be your downside risk at this time, and that's quite a ways from where it is right now. And like I said, we're popping up about 15 handles, so that's going to be we'll call it 780 coming into next week. So I don't even think that number's in play. I think as far as the grid goes, we'll stay within the grid on this stock as we move forward. Okay, so we're going to do Apple next. Apple's become interesting again. Of course, they have the new Mac out and new AirPods. But one of the things that happened on Apple is we got We got a cycle low. This is weekly. Last week, I don't think I covered this. I may have. I did do some stocks. It's been a little while since I covered it. But this cycle low is important, and the price to watch on Apple is the this. Let me just make sure I got the right number here. Is the 144.90 level. We're actually trading 148, so we're above it. If we finish the week above 144, that's going to confirm the bottom cycle, which is going to set a new tone on the upside. So it's pretty obvious, I would think, if we're going to see the market expand, right? Apple's got to be a player. I mean, it hasn't really been a player in some of this, and that would set the VIG to a next level where we'd probably see the indexes and especially maybe the NASDAQ come back in. But I think Apple has to be a player. I mean, it's up 0.08 right now, but the PPMs are set up here pretty good, okay? So this is definitely a stock that's on the move, and it's going to continue. There are some short-term objectives in here that to pay attention to, which is around the 156 level. If we get above 156, we should start to move toward next levels, and we should see the trend actually expand. Right now, PPM 1 is up at 0.1, PPM 2 at 0.83, and so there's a decent underlying demand for this, but I think it will start to accelerate over the next couple of weeks, and we're definitely going to see, let's see what this magic number is here. Magic number, yeah, 155, 157, those are the numbers you're going to want to watch. We get above that, then we should see next level, and there's no current Fibonacci projections, but I would suggest that this old pattern here might have something to it, 168, 167, so that's a pretty decent move on that stock. So let's so we're going to do my pick of the night, which is going to be COP, Conoco. This is a stock that's been really explosive, and probably should have covered this a while back because this was a really explosive stock. It had everything to do with the energy trade that I've been talking about. And what we saw here is this thing get this breakout move, and it just moved into now. So where we are right now on this stock, this may tell us a little bit about some of the underlying trends in the energy and things that I'm going to actually cover after we finish 3 more stocks. But what we're looking at here is the potential for what's called a dragon head. That suggests that we will consolidate for probably another week, and then we'll try to move higher. And crude oil seems to confirm that as far as things go. So let's take a look at some of the things that you folks were asking early on. I'll take a pick. Now this is this might be somewhat related, but there's not a lot of data here for weekly. And I just brought up coin, and this thing's been pretty explosive, almost a similar pattern. What's probably going to happen here is we're going to see a consolidation up here. This should coincide with some of the analysis I'll do in a minute on Bitcoin. But we should see this thing really start to consolidate, probably set up a little dragon head here. And then when this 10 gets in here, it's going to take, this is daily. So we're going to take 5-6 days, sometime next week. We could see it start to move higher after that, but we should see some consolidation here on this one. So almost got to cover some of these. This is American Airlines, and I haven't talked about the airlines for a while. I think they continue. Let me go to a weekly so we can get a better view on this. So American continues to move higher. Last week we got an RTX sell signal, so we should see a couple weeks of sideways. The play here, the demand line's 48.02. That is the 10-week moving average. It's going up about $1 a week. So somewhere around 49.50 is going to be support. But we are seeing some loss of momentum, but we are in trend maintenance mode. So this upward slope is high enough. We got 1.54, 1.45, and 2.2. So this upward slope is very positive, and there is some potential objectives here for this thing to go. Let me get the numbers here real quick. For it to go around potentially to as high as 59 first, but most likely could see as high as 69. So this stock looks pretty good. Okay, I'm just looking for. Yeah, let's look at this. I like the oil. I'm just looking through some stocks here, folks, trying to be as efficient as I can. This is Occidental, old favorite of one of my mentors way back in the 80s. He loved this stock. He used to trade the crap out of this thing. Looks like we're potentially heading for the 200-day 44.23. Still looks pretty good, but this is definitely a laggard relative to that ConocoPhillips I was just showing you. So I'd say this is weekly. We should see it move. There's some objectives right here. Minimum objectives 36, 39, and then 44 is that 200 week. So we should continue to move up there. Okay, last stock. Let me take a look here. Let's see here. 1 second. Just looking through a bunch of chats here, folks. Okay, I got a wrong symbol here. 1 second. Bear with me. I'm just going to do this. I don't normally cover this, but we're going to cover silver, even though it's not a stock. This will be in that realm. Silver is actually starting to look pretty interesting. And matter of fact, I like the metals across the board right now, because the Paul Tudor Jones was on CNBC today, and he's telling everybody Bitcoin is the answer to inflation, and gold and silver are not really in play. So I'm gonna fade Paul. Many years ago in the 80s, a friend of mine worked for Paul Jones. He used to get my newsletter, and I actually never met him, but one of my really good friends was actually college roommates with him. But the point is I still think the metals have a play. I don't believe they're out of play. I realize a lot of younger traders and people in the markets are really stuck to Bitcoin and that. But I think the silver chart's starting to look good. There's still a fair amount of downside resistance on this chart, and it's right at, here's your challenge on silver, is around 2284. It's going to take probably another week of stability, and then we can start to maybe see this thing move higher out of here. Okay, so we're going to get back to the normal cycle of things, and we're going to go to the 10-year. A 10-year is at 1.36. Did I see somebody quote that it's at 1.67 overnight? I'm not sure. This does not run a 24-hour chart, But the interesting thing about here, and I've been talking about this a lot, this is the weekly 10-year, is the ppm is a plus 0.242, which is very positive, negative for bonds, and telling us that the likelihood of a decline right now below, it's a ways away, 143, but it's really down toward this range here of the 145, 143 on an intermediate basis is substantial support. But with these ppms cutting through, we're now seeing a couple things, and I know I've talked about this when I covered this market, is that we're starting to see ppm2 turn up. And ppm2 turning up in this type of pattern all but guarantees, and I told you folks my nickname on the trading floor is Dr. Given, and I'm going to tell you it's a given that we're going to print up to the 200-week moving average, which right now is at 1.86. So we will see this go. I think the all-time high close that we've had, not all-time high close, but in this year has been 165, I believe. I had a note here somewhere, but I believe it was around 165. So we're very close to printing a new high close for the year. And I think this is the momentum here is really bearish on bonds and bullish on yields to continue to climb. And I believe that's going to be the case. And as I told you on the opening comments, yeah, this show is going to go over an hour today. So thanks for hanging out, everyone. But what I told you in the opening comments is I still think for years we're used to the tail wagging the dog. And what I mean by that is the Fed is directing the markets through QE, through all the operations they've had. And many people are on the markets. And if you started in the markets after 2008, even going to 7, but 2008 and beyond, you think the Fed actually always leads the market and they decide what's going to happen. And I'm telling you, as a guy that's got a lot of experience, that's not how it works. That's how it has worked for a lot of years, so over a decade. But what I'm telling you is ultimately the way the Fed used to be, they would adjust to market rates. And a couple rates that you're going to want to watch is the bottom end of the yield curve, 13-week, the 2, the 5s. Those are the places you're going to want to watch more so than the 10. But the 10 is going to continue to push higher. And I've been talking to you about a while about the yield curve steepening. We need that yield curve to steepen. That starts to happen. I think the Fed's going to let this thing run. And when I was watching, what's her name, Metzel, the Fed president, she was basically saying, well, we're not going to raise rates for a while. We're a ways off from making that decision. And they may taper, right? And what they don't get, it's somewhat funny, I think. What they don't understand is when they do taper, rates are going to go up. There's going to be fewer purchases, and all of that's going to force rates to go higher. And ultimately, my opinion is that if we did break above this 200-week moving average, then we've got something even bigger going on, which is now the market forces are going to tell the Fed what to do. So back to the dog wagging the tail, not the other way it is. And since Ben Bernanke, all the way through the Yellen era and into Jay Powell, this is the way it's been working. They're very cocky almost that, hey, we can make we can make things happen the way we want. I think at some stage, just by debt, by the craziness that we're seeing in inflation, all of these forces are going to add up to the Fed ultimately, pun intended, getting behind the curve. And when that happens, then they're going to have to step in and start to do some other things. Now, there's other questions to be out there with all the crazy money spending and the printing of money. And if they get this infrastructure deal together, there's a lot of ifs. And they're going to get, I believe, some sort of infrastructure deal together. And how much that causes more inflation, what kind of disruptions that could cause is going to be what we're going to have to watch. But all of the charts right now, and I've told you folks before, one of the things I do is something called reverse fundamental. So, okay, if the chart's telling me we're going to print above 186, and if I go on this chart here and I flip it over to a monthly chart, it gets even more scary because I've talked to you about this before, that ultimately we end up somewhere around the 200-month moving average, which is 0.27. And there's actually objectives, current objectives right now. I'll bring this on the screen. Current objectives here of the potential for the market to go, let me just get the right number on here, to go up to around 218, 246. And the one thing that's going to hold this market back at the moment is the 40-month moving average. That value right now is at 168. So we're going to have to hesitate. So what could happen, we're seeing this convergence happen on this market. I don't know if I'm going to try to zoom in on this. Sorry to get a little long-winded on this, but this is where the rubber meets the road, so to speak. So let me try to zoom in on this. Okay, good deal. So what you're seeing here is that rising 10 pattern I talk about. In fact, the PPM1 is at a plus 5.16. That's an insane number in momentum. And what's going to happen, now we're months away. We're coming into the first of probably 22 before this happens, but we're going to see that upward cross of the 10 and 40. And depending on how prices move, if we get above 168, that's going to be the big number. I've told you before, 170, 175 is really the breaking point. That was the high that we saw in March. But once we get above that, all of this becomes possible. All of the stuff that I talked to you about early in the opening comments about the possibility of the Fed losing control, rates going up very quickly, and they're not going to be, there's nothing they can do to stop this from happening. So, I've heard for years that the Fed has run out of bullets, and so far they haven't run out of bullets. But I think they're in a place here at an inflection point, and the driving force is going to be those inflationary, so-called transitory, right? Those are going to be the issues that you're going to have in trying to move, I guess, that are going to drive this market higher from the standpoint of yields. And we're just coming at this amazing intersection of a lot of forces, including the infrastructure deal, the debt ceiling, all that stuff. And I've told you before, I don't care about the debt ceiling. What I do care about is what we saw a little glimpse of today. Nothing really big, but on that 20-year auction, when we saw really the participation wasn't that good. It is a bastard, like I said earlier, it is kind of a bastard yield maturity length, but still, those are the kind of things you start to see little cracks in the armor, and all of a sudden, everybody becomes sellers and the bond vigilantes and all that stuff happens. So the interesting part of this, at least at the moment, I'm not sure how this is going to affect the market. So where I'm at right now in this scenario is I can see what's happening in yields. It looks to me that we still have positive rotation going on in equity markets. Just kind of tie this all together. I'm on a classic rant, so I apologize, but this is usually the good stuff. Is what happens from here is that inflection point where once we get to these levels, now we're probably talking the end of this fourth quarter coming into the new year. This is when these forces are just going to be just crossing and all at one point. I've talked to you a lot before about the idea of clusters of numbers coming around. Well, this is a giant cluster coming in, and depending on what kind of numbers, when they get the infrastructure deal, if they do get it done, I told you, I don't know, 3-4 months ago, this was going to be nearly impossible. And right now, what we have going on is you got 48 votes. What they aren't telling you, you have 52 votes against, right? So they're saying, oh, there's only 2 votes, there's only 2 people. No, there's 52 people that don't agree with this. And so there's a lot of forces, there's a lot of pressure. 22 is a election year, mid-cycle election. There's a whole lot of pressures on these politicians to try to figure out how they want to place their bets going forward, right? So all of these forces are coming in at once, and I think it's probably going to be the next couple months one of the more interesting points in time that we're going to see. I didn't expect that ramp to come out of this interest rates, but this a lot of thoughts that I've been thinking about here that I want to share with you so that you have some perspective. But I would say make no mistake when you look at these PPMs on a monthly. These are insane formations here. This market is setting up a major bull market in yields, which is bad, or major bear market in treasuries, right? And this is going to be really big. There's a couple last stands here. We haven't signaled everything, but I'm watching this thing very closely. And for those of you that don't know, I spent almost 12 years as working on a bond desk, institutional bond desk, and doing hedging and all those type of things. So this is probably one of the more exciting moments I've seen in treasuries for a while. And it's maybe they'll find a way to head off these forces, but this is going to be a game here, folks. This is pretty serious stuff. So anyway, I'm done. Thanks for listening to that. So let's move on. And so where we're going to go next is crude oil, but I'm going to cover a couple other energies as well. So here we are, crude oil up another 44 cents. We saw the supplies decline kind of unexpectedly. I think people weren't really looking for as big as decline in supplies, but we keep drawing down the PPMs here across the board on the weekly crude oil are absolutely insane. So let's take a look at a little more in depth here. So a couple things. I've talked about 88.49 is the next target for crude oil. And it looks like it just wants to climb there. I don't think it'll be until next week. We look at the market grid. 84.77 is R2. R3. RXT is 85.70. We could end up getting that high by the end of the week. There's just a lot of momentum in here. As I just pointed out, the PPMs, the angle of attack is huge. And what should happen over the next, we're going to say 2 to 3 weeks, is the underlying trend will be this 10-week moving average. It's currently at 73, so it's popping at $2 a week. So next week it'll be 75, and then the following week it'll be 77 and 80. All of a sudden we're going to have substantial amount of support between 77 and 80 in the next couple weeks. So this is a very big trend, and I'm going to go to monthly here as well. I won't get into a big rant, but we're probably heading for a 200 month moving average here. Once again, the PPMs on a monthly this is crazy momentum, and the demand line right now is at 66. It'll be 70 as we come in to next month. We've got about 10, 11 days left in this month, so we're getting closer to the end of the month. But 105.60 is going to be a minimum target, and I think there'll be a fair amount of resistance in that higher 92 to $100. That's going to be an inflection point as well from that standpoint. So the next market I'm going to look at here, we'll go to TradingView and use the PPMs on TradingView, is natural gas. Now, everybody's talking about natural gas. It looks like to me we're starting to set up at least a high-level consolidation, probably a wave 4 from an Elliott viewpoint. We're going to set up an ABC or maybe a triangle, ABCDE, or some pattern, even a very complex pattern, although it should be simple, because the rule of alternation on Elliott wave, when we topped out here, this looks like a complex wave 2. So we should have, when we do set up this way for it, should be a simple ABC and then new highs again. But the momentum here on this is pretty high. This is the weekly that we're looking at. So we're trading right into the support right now. And that is right now, let me just get that number. 371. We were at 388 yesterday. So that is going to start to be pretty good support where we should set up a consolidation here. So I'm going to bring up the propane futures again. I covered that last night. Abbey Road spent a lot of money, so I feel like I'm still giving him his value. So thanks for that. So what we're seeing here, and like I said, I think these energy markets, at least the propane, nat gas, those things are going to start to hit a little bit of a wall here. And we're going to have to see what kind of formation sets up in this level, because this is somewhat extreme, and we're seeing PPM starting to roll over. They're still very positive, so we could end up in this trend mode. But I still think we could probably decline back to 1.31, something like that, in this level, which would be the 10-week moving average. And we did see a little bit on the dailies where we're starting to see it trade below the 10. I think a pattern sets up. There's a big gap here that probably is going to get filled as well. So be patient on that one. Okay. Next up, we'll do gold. Still remaining, this is monthly gold. Let me go to what time we're getting. Man, hour 3, an hour long, and I'm not quite done. So I told you we'd be over an hour, so we'll just keep rolling here. So let's go to the weekly gold. I absolutely love this pattern. We still need some more work here. One more week after this, if we can get above these averages, 1800. I've been beating that horse pretty hard. That's your magic number. If you get above 1800, then you're going to probably move, not directly, but you could do some of the objectives here over a couple of weeks. We could be looking at 1920 and beyond. Okay, this pattern is setting up. It's not quite complete. We need that close over 1800. We need to stay above that. And I'm encouraged by some of the weakness we saw the other day. We're able to come back in. So let's take a look at the monthly chart, because I think this is actually even more bullish, but we're not quite there on a monthly. We still have a lot of negative potential here. 1795, here's the number. 1800, 1795, 1817 is a number that we're likely to see the market move towards. So I'm going to go with right now, this is October, that November, December, your Christmas present is probably a rally in gold as we come into year end. So let's go to the final market. Bitcoin. A lot of non-believers out there. This thing is on a run, and literally got, if you look at these dots that are on the page here, got a cycle low signaled on 9:30, confirmed it on the next day on 10/1, and we've been straight up since. And this pattern, talk about this rising 10 pattern, that it's up 1.81, and that's your magic number, 59,101 overnight. As I've told you before, this chart updates in about 2 hours, so I can't get the actual numbers for the next market grid until then. So it's kind of disappointing, just the timing of everything. But this is very positive pattern. PPMs are still very robust, 1.179, 1.86. So let's go to weekly. And I've been talking about this number for months, actually, 60,612. That's the magic pivot number. That is not a resistance, but a pivot. And there's a difference in this pattern here from that standpoint. So a pivot would suggest that it could be like a swing pivot, where all of a sudden, like I said before, you're looking at maybe 85, 106. That's 85,106. That's going to be a really big number up there. We continue to maintain over this number into, this chart doesn't close out till Sunday night. So this will still be in play on Sunday night when I do my Sunday night video. And then late Sunday night, we'll be able to look at some of these other numbers from what the perspective is and all that. But PPMs are, I mean, insanely bullish. I've been telling you that going back to around 40,000, this thing was turning, and we're just seeing a lot of acceleration in the trends from that standpoint. So I don't see much changing here. 59, if you saw we'll call it 60, 612, if you bounce back onto that number, that would be huge, or even the possibilities of printing on that daily chart around 50. Let me get to that just so you have an exact number. That 10 demand line is, right now it's 60,182. So 60,600, 60,800, that's going to be magic number. And even the market grid is projecting much less than that. So folks, thanks for hanging in. Hour and 3 minutes. So that's a lot longer than I thought we would get to today, but there was a lot to talk about, and I had to end up on a couple rants. So I hope you enjoyed, and don't forget to like this video, subscribe, all that stuff. Tell your friends. We've been hovering around 30,000 forever. We should be at 50 or 100,000. I think I would. There's just so much out there. So please share these videos, would you? Appreciate it. Have a great night, everyone.